Okay. Good morning, all of you. Am I audible to you all? So we'll start with balance of payment. We discuss what balance of payment is. So we will discuss further about balance of payment, its features, its importance, and its components. We said balance of payment is a statement which records all the accounting transactions that are monetarily measurable. In short, economic transactions of a country with the rest of the world. These transactions include payment for a country's exports, receipts, uh, payment for a country's exports from other countries, receipts for its imports of goods, services, and if it receives any financial capital or if it invests some financial capital abroad, and any kind of financial transfers. These are recorded in a balance of payments statement. So whatever transactions you have which are monetarily measurable, in short called as economic transactions, are recorded in balance of payment statement. So balance of payment ideally records country's transaction with the rest of the world. So Kindleberger defines balance of payment of a country as balance of payments of a country is a systematic record of all economic transactions between the residents of the reporting country and residents of foreign countries during a given period of time. So what are the features of balance of payment statement? Balance of payment records only economic transactions. Economic transactions, as I mentioned earlier, means transactions that are monetarily measurable. It records transactions only for a specific period of time. Usually it is an annual statement prepared. But if required, we can prepare for half yearly or quarterly, but that is if required. It records statements with other countries. Whatever transactions you have with other countries or your country has with other countries, residents of your country have with other countries, government of your country has with other countries, maybe borrowing, lending, investment, whatever. Record. Those are recorded here. It is a flow concept. Very, very important. The flow concept or there are two types of concepts when you have transactions recorded, flow and stock. When I talk about an income statement is a flow concept, whereas your balance sheet is a stock concept. What does that mean? Flow concept means as and when transactions are taking place. Like if you receive money, you record it then and there. That's what you do in an income statement under the respective head. If you pay money out, you're going to debit it then and there, right? Same way, balance of payment also, if there is a receipt, you credit it under the respective head. And if there is a debit, you're going to have a respective head name, you're going to have a debit entry. That is called as a flow concept. Whereas what is actually a stock concept? This is not mentioned here, but stock concept is your balance sheet. End of the period, whatever you have left with, like your fixed assets, etc., as far as your balance sheet is concerned. But here we will see what is happening. This is a flow concept. As and when transactions take place, you keep on recording them. It adopts double entry bookkeeping system, which means each transaction has a debit and credit aspect of it and has to balance. Any balance of payment statement has to balance. If you have a debit here, which means there is a credit somewhere else, which means goods have come in, so you have paid money, right? That is what it is. Now we will talk about this errors and omissions account when we talk about current account. And then it has two sides, credit side and debit side basically. So as I said, every debit has a credit. Receipts are recorded on the credit side. Yesterday when I mentioned to you, I said that whenever you receive money, you are going to credit that. Like through export, you're going to credit it as export. If it is going to be debited, you're going to debit it. Like for example, if you have invested money somewhere, under the respective head, you are going to debit that much amount. These are the features, notable features of a balance of payment statement. Liability. But clear, there is no liability, there is no asset. Liability, assets, all these things come under your balance sheet, which is a stock concept. Balance sheet क्या है? End of the year, end of the period, आपको जो बचा रहता है, इतना स्टॉक बचा है, इतना फर्नीचर बचा है, इतना कैपिटल है, वो प्रिपेयर करते हो. उसमें और इसमें कोई कनेक्शन है ही नहीं, राइट? Here you are just recording a country's risk. Komal is not able to join. Komal, how can I help you? Because I am admitting all. I'm admitting all. Komal, are you able to join? Are you able to join, Komal? I'm joined. She has joined, so we'll resume. So now we will resume with this. Are you clear till here? As of now, any doubts? Are you following?
Ma'am, in which head?
I'll give you the different heads. In invisible items mein aayega, but I'll give you different heads. Is that okay? I'll show you
Okay.
how this thing is. Who's not able to join? I'll just check because there are students. I'll just check. Some of you are not able to join. Hari, can you please hurry? I don't find Aarti is not able to join. Aarti, have you joined now? It's my bad. Now, when I show you my whiteboard, I'll be showing you how the account looks like. Are you able to see my whiteboard here?
Yes.
Yes, I'm not able to. So I'll just. See, I'm not able to. Gee, accessible. Am I clear here? I repeat, this is going to be my current account. The first, I'll record it also for you. So it says current account is the first part, wherein the first item is goods transaction. When it is imported, I'm going to debit the amount. When it is going to be exported, I'm going to credit the amount, and greater total and balancing figure will be recorded wherever there is a shortfall. Surplus implies inflow greater than outflow. Deficit implies outflow greater than inflow, right? Like for example, my debit figure exceeds the credit figure, balancing figure will be here and it is a deficit for me. And if my figure exceeds here, credit exceeds the debit, it is an inflow, my balancing figure will be here and it is a surplus for me. Equilibrium implies zero balancing figure and inflow equal to outflow. Therefore, I say that this is called as balance of trade, which is a very narrow concept. We don't use the term profit loss here. It is ideally surplus deficit.